Tyler, I hope you're ready for the comments. We're going to do a video about Plug Power. Plug Power just reported its fourth quarter results a few days ago, and it's not pretty.
It is not.
I'm Jason Hall. This is Investing Unscripted. Tyler and I, we've made other videos about Plug Power. I went into this, I wanted to give the company the benefit of the doubt because they did remove their going concern notice, and they've talked about improvements they're trying to make with cutting their cash costs and some other things that they're doing. When you start looking at the math, the numbers, it's really not looking that great. Let's get into it. But first, just a reminder, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, actual great stock ideas, please go to our special link. You see it on the screen, fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. Tyler, I'm going to start off with the press release that we got from the company. And this is something that we've seen Plug Power start to do. And that is their press release. They don't have any financial results in it. They don't have revenues. They don't have their operating statement. They don't have their cash flow statement. They don't have a balance sheet statement. You have to go to their SEC filings to get it. Thank goodness the SEC is a thing because it does give us access to those pieces of information. And since this is their fourth quarter results, it's their 10K. It is audited financials that we have. They did talk about some new deals that they've been awarded, expansion of existing contracts with existing customers, some new customer things that they also talked about in a few other press releases. But Tyler, I think there's really two things that we should focus on. Number one, we'll talk about the fact that they did get the going concern notice removed, which for those that haven't watched other videos or not familiar with it, a going concern notice is it's a requirement when a company's management and its board, they have a fiduciary responsibility. When a company no longer has the resources, whether it's cash on the balance sheet, cash flows coming in, access to financing, other sources of liquidity to remain a going interest for the next 4 quarters, the next year, it's required to disclose that to the SEC, disclosing it to investors. And they were able to remove that. Let's talk about why they were able to remove it. And this is going to feed into why they weren't able to, what was not the reason, which I think is the bigger issue.
Yeah. When the first press release came out, and there was a lot of, we'll say, some quick hit news releases discussing like, why is the stock up and why are things going on? The big thing that of the day was a lot of people had written that Plug Power had removed its going concern notice. It initially popped up in its third quarter earnings release. So when I first saw that, I was like, we were looking at the balance sheet back then, and it showed a lot of inventory building up. It showed dwindling cash reserves and this idea of like they were just had a lot of working capital and didn't really have a way of converting that to cash. And so when I saw this quarter where it said, oh, well, we removed our going concern notice, I was like, so they were actually able to convert some of this to cash and improve their balance sheet. Then
I think you and I both initially when we heard that, it's like you got to feel kind of optimistic. I know you and I we agree broadly that hydrogen and green hydrogen is probably going to continue to become a larger source of energy around the world, and you want to pull for companies that are trying to build something to create that infrastructure to do it. But in typical Plug Power fashion, I hate to put it that way, and I know it sounds cynical, but it wasn't cash flows from customers that bridged the financing gap.
No, far from it, actually. So once that kind of came to light, I immediately went to the balance sheet and I was like, oh, they must have improved their cash position or something like that in the most recent quarter to make this a possibility. And then when I went to that cash flow or that balance sheet statement, it said from the third quarter to the fourth quarter, it had dwindled its cash reserves from 567 million to 135. Its total inventories actually decreased by about 50 million. Its total receivables overall, we just saw a further buildup of working capital. So I was like, so how did they convert this to cash? And cash flow statement didn't show any improvements in cash. Its cash from operations continued to be negative. And then, going back to the financials or the regulatory disclosures, it showed that from January 17th of this year to February 23rd of this year, the company sold $300 million worth of stock already. So in 1 month,
$302,073,006 to be specific. It sold 77.4 million new shares of stock. It ended the year with around 595 million shares, average shares outstanding. So by my math, Tyler, existing shareholders just saw another, what is that, 12% dilution? I'll
Pretty
confirm
close,
the
yeah.
math, but the point is that it's another case of the same thing that has happened to Plug Power shareholders time and time again. The company can't sell its way out of its balance sheet problems, and it can't sell its way to customers. It has to sell stock to the open market to raise cash.
Every single point of the income statement, of the balance statement, of the cash flow statement continue to show deterioration, continue to show weakening positions. Its gross margin.
Yeah, I want to hit on that for just a
larger.
second because I think it's really important. I'm gonna share a couple things on the screen. I'm gonna share. So these numbers are going to differ slightly from what Tyler was saying because he was talking about the difference between the third quarter and the fourth quarter. This is comparing the end of 2023 to the end of 2022. So the 2023 numbers are going to be the same as what Tyler said, but again, we're looking at the year-over-year comparisons. And again, absolutely burning through cash. Again, this does include cash raised from secondary offerings and all of the things that they did after January 1st. But the point is that we did not see any recovery in the financial results in 2023 at all. So if you look at current assets, so this is basically things that you can turn into cash quickly, like cash, inventory, ideally those sorts of things. That number got slashed not quite in half. Total assets depleted by $800 million, $900 million. That's substantial. And then you look at their liabilities, current liabilities, again, things that you owe within a year, that increased $300 million year over year. So that increased 50% almost year over year. And then total liabilities increased roughly by the amount of current liabilities. And this is important. Revenue, $891 million. Revenue was basically flat. The growth story has stalled, right? The growth did not happen in the quarter. And this ties into the other things we were talking about where the money's going. Where the money's going. You have operating cash right here, which is the yellow line. Revenue continued to ramp higher. This number continued to get even worse. You should see operating leverage where the losses shrink as the revenue number grows, and eventually you get enough operating leverage where you start generating positive operating cash flow. It's going the other way, Tyler. And then you factor in on top of the operating cash burn, add in capital expenditures, the money for expansion that they've spent, like for their green hydrogen facilities and that sort of thing, that are increasing the cash burn. They're not offsetting it. And the picture continues to get less and less appealing.
Look, we've said it before, we've said it again, and I know there's going to be some people that disagree and say, oh, you just wait. When they get this thing turned around, there's no way that they're going to keep losing money. But they've been losing money for 25 years. This story that we have just laid out of telling stories of partnerships and telling stories of sales agreements and how it's going to be transformational in the economy or in energy or in mobility and all of these things. And yet in 25 years, it hasn't made a profit. It cannot make more money on what it sells than what it costs to make it. Never mind what it costs for sales, never mind what it costs for research and development. None of these things have translated to any form of profit or any signs that they are improving. They continue to just get worse. Like we said, they removed this going concern notice because they raised $300 million and they expect to raise another $700 million this year alone at its current stock price, which is $3.67 as we're recording right now. That is a lot of dilution.
Let's convert that to market cap to talk about the impact on investors. The market cap is roughly $2.5 billion. So you're adding another $700 million in dilution on top of that. That's giving, what is that giving? That's giving roughly 25% of the company away. That's taking it from you, your percentage. If your share ownership stays the same, that's taking 25% of the business away from you and giving it to the people that buy these new shares. That has been the thing that has constantly happened with this company over the long term. So let's wrap this up, Tyler. We're getting long-winded. Last thoughts, and then I'll give my last thoughts to wrap up the video.
Look, nobody wants to see a business go down, but at the same time, I don't want to see investors continue to be told a story that is going to destroy value for them. And this is a case of this company. And so in the defense of shareholders, I would say stay away.
The only thing that I would add to that is I do think that green hydrogen, particularly as costs to produce renewable energy fall and the technology continues to improve, there is potential there. But I would just simply say, we're not shorting Plug Power. Neither Tyler or myself have any financial interest in it. We have no financial relationship with anybody that is short the stock or anything like that. It's just a really popular company, and the story is really interesting, and we're trying to caution investors from making a mistake. There is nothing in the world wrong with just sitting back and watching the story play out. And maybe eventually something changes with Plug Power and they figure out how to make a dime. They figure out how to make $1. And once there's proof that they can do that, then it's time to invest. You don't have to get in early. You don't have to get in before profits show up with this kind of business, because at this point, guys, it's a quarter of a century. It's no longer early. The story's here. The company doesn't make any money. And until they can change that, I think every dime you risk is a dime that you're just giving away.